Hello, fellow traders and investors. Welcome to a new series titled The Weekend Crypto Update. My name is Jarad. I'm a moderator with Bear Bull Traders, and I've been involved with the crypto markets for about a year and a half. But I've also been an equities and options trader for over 3 years. So a lot of the experience and insight that I've gained trading those markets has benefited me when looking at this particular asset class. In this series, we'll look at different ways to analyze crypto, both from a technical perspective, along with looking at different projects and upcoming opportunities in this world. For this initial video, we'll look at a starting point, which is the Bitcoin USD technical analysis. We'll kind of start off with the monthly, drill it down into the weekly and daily, and that'll give us a foundation moving forward as we layer in more information for this series. We'll also take a look at one or two indicators I like to use, the overall crypto market and market cap fluctuations this past week, and then wrap it up with some news that occurred over the past week. So without further ado, let's go ahead and take a look at Bitcoin. When starting off with the Bitcoin USD pairing, here I'm using the Coinbase exchange, and this is the monthly time frame. We can see that over the past couple of months, this particular asset has been on the decline, as we have made a new all-time high back in November, and then saw a couple of months of downside activity, getting back into some relative lows on the monthly chart. When starting off with the monthly, it's wise to start to mark off some relative inflection points. And that's as simple as marking things like previous all-time highs, all-time lows on the monthly pullback, and then things like new highs, although they did have a lack of follow-through, and then our most recent monthly low, which so far has not been tested, but also has not been breached. And what we can see is that there are sort of a trading range overall in the monthly time frame, with most of the price activity leading up to the first all-time high, essentially in a monthly uptrend with higher highs and higher lows throughout. This is of course coming from the May 2020 halving cycle. This particular asset goes through about a 4-year halving cycle, and that often provides sort of a supply, demand, and balance, and an initial run-up in this particular asset, which is the draw for a lot of investors and traders looking for those events to take advantage of new participants and new volatility in the market. Switching over to the weekly time frame, you can see that during the initial breakout of the previous cycle high, there were weekly levels that weren't as apparent on the monthly time frame. Levels like these relative highs and lows. And what you start to notice is that some of these levels are actually respected moving forward in time. You have things like 42,000, which is the approximate high of a sell swing before a very steep pullback. This marked a relative high for a crash range. This range being an accumulation zone for this asset in May through July timeframes of last year. You can also see that things like liquidation crashes. This is often where over-leveraged longs in the marketplace are margin called and are forced to sell. Usually this inventory is placed near these relative levels, and even during high volatility events like this, you'll get good response or respect of levels that have been set back in time. So these weekly levels are worth keeping on your chart, along with the fact that they often coincide with very significant highs and lows. In this case, we have a pullback low during the initial markup or uptrend phase, actually respecting a relative low after the May crash. Now, obviously, there are things like 30,000, which are also important. This is the liquidation low that essentially set up the trading range for a couple of months. But as far as the absolute low, there's a lot of confluence with both the monthly and the weekly respecting this particular pullback. So we start to see a little bit of a picture here in regards to lower trading ranges, and that includes the ones that we're currently in, being a bit more of a demand zone for this asset if it were to become in a bullish uptrend. Additionally, relative highs on the monthly, along with things like certain trading channels, which we'll go ahead and mark in just a moment, are respected as supply zones and often provide some of the highest risk in regards to corrections or pullbacks in this particular market. Now, as we shift into our daily and just kind of get a sense of where we currently are, you can see that this market is not only responding to these levels with multi-day sort of consolidation phases, along with things like lower shadows or wicks on the daily time frame, but additionally, you can start to see some structure here in the form of that channel mentioned before. Now, what this looks like is actually quite interesting because it was a bit predictive of some recent trading activity which we're about to zoom into. For example, if I go ahead and grab my parallel channel tool and I start off by marking things like the first all-time high and then our most recent all-time high back in November, what I can do is simply draw this tool down, keeping this upper and lower trend line in parallel. And you can see that as I connect to the absolute lows marked off in, I'll just adjust this accordingly, trying to get this magnet tool to connect. As I mark off things like the highs and drag it down to the lows, you can see that there's actually 2 points of confluence, essentially somewhat confirming this lower parallel channel. Now, this is all great and everything for the first crash, but we didn't have our first high, even though we did have 2 daily lows that connected here. But as we extend this out and we keep our topside channel connected, be right about there, we can see that recently our most current swing low, basically the low that has been set, and we'll talk about some of the changes in the sentiment, actually came off of this particular parallel channel. This becomes even more obvious when you get to the monthly, and you can see that if I just mark things like monthly lows and then our most recent higher low, so far unconfirmed whether this is going to hold or not, this actually captures all of the trading activity for things like the monthly oscillations from all-time highs into relative lows. And it actually provides a good risk to reward for traders and investors who might be looking at this as a possible channel that's not only going to hold at the low, but might also once again come back to test the upper bounds, or maybe even get to the mid-range, which still provides excellent risk to reward from a long bias perspective. Now, as we get into our daily and we start to refine this a bit more, another thing that investors like to look at is things like trend lines. And these trend lines are often going to be found on multiple time frames. They'll have different biases and different ways to draw and analyze them. But one of the most simple ways to start off here is to mark the all-time high that was placed back in November, starting our trend line essentially parallel, and then swinging this trend line out until we hit a candle especially in this case an upper shadow of a candle, and simply mark that as our first connection point. Now you'll see that although I marked this particular high as the first connection, this relative high also acted as resistance and provided the last swing low in this overall daily downtrend. What you'll also notice is that recently we've had a breakout. And while this is a very interesting difference than what we've seen back in May through July, where this asset had to be purchased or reaccumulated over multiple months, this breakout is in essence a bit of a sentiment change, where instead of the market making lower lows and lower highs, we actually got a change of our daily trend and a potential weekly trend change. Once again, this is not confirmed, but the bulls have given themselves room and have negated a previous weekly lower high in order to form a higher low and possibly change the weekly trend in their favor. So as we sort of refine ourselves into the past couple of weeks, and we maybe add one indicator here just to add a little bit more information. For example, a simple moving average. Let's go ahead and make this a 20 period, as this is often referred to as the early trend indicator for a marketplace. You'll see that not only did we break out of the downtrend retracement, but we also broke out of the 20 period for the first time and held in regards to making new swing highs after the breakout. This is an example of a possible breakout, but it turned into a false breakout, reconnecting to the 20, and then of course the downtrend retracement line forming off of that rejection high. So last couple of weeks have been interesting for this asset because there was some new sentiment change, and obviously the marketplace trying to hold a possible trend change. You'll notice over the past 5 sessions, especially due to some of the equity volatility we've seen in the S&Ps and NASDAQ, this asset is starting to lose that 20 period once again. So bulls are certainly trying to defend a weekly higher low and hopefully form something like a new reaccumulation range, or just an area where larger market participants are buying versus selling. But in the short term, this asset is struggling for the bullish perspective, even though we did see lots of renewed interest and follow through, particularly on this January 24th low. Now, what's so interesting about this is this particular asset is quite aligned to the S&Ps. You'll note that the absolute low of the most recent correction did occur on January 24th. So both Bitcoin and the S&P 500 quote unquote bottomed at about the same time. But unlike the S&Ps, which we'll go ahead and shift over to briefly, I'll just bring up the SPX index. You can see that things like this weekly trend change potential are still in the process of forming. And as the S&P had been in such a strong uptrend prior to, along with the potential rejection off of the 20 that's occurring short term, this becomes an area of interest for a lot of traders and investors, because a confirmed weekly trend change with this breakdown, breaking our most recent swing lows and our distribution area of volatility, a back test of something like a trending moving average, and then new and fresh lows in the market would certainly bring a lot of fear, and this would affect assets like Bitcoin which in the short term are often referred to as more risk on, speculative, or just a bit higher risk overall for higher reward in the long term. So this is a good technical overview. It provides multiple viewpoints of this particular asset. And one more indicator just to showcase a recent activity, something like RSI. Once again, just staying on the daily time frame, you'll see that during the January 24th lows, the RSI became oversold. And this is exactly what occurred back in the May crash, which once again was more of a liquidation crash where over-leveraged longs were forced out of the market. This did not occur during a more recent liquidation low, approximately the 42,000 retest or back test from above. RSI did get into those relative extremes, but not quite as oversold as the crash. Additionally, you'll notice things like RSI often will stay above the midpoint, which is 50, in an uptrending market. And pullbacks will often be bought off of the 50 if the uptrend is to continue, along with just staying higher than that midpoint. More recently, we have seen a return below the 50 line, and this brings a bit of uncertainty and concern as to whether this bounce is going to stabilize or will we see another retest of this 33,000 low. So that's more the technical overview, just adding things like an oscillator type of indicator along with price action based technicals, and then our parallel channel and even a moving average to showcase some of the nuance that's been occurring more recently, along with our longer term perspective here, where we do have an asset that has appreciated quite graciously from things like the COVID low. Essentially from a price point of 3,000 a coin all the way up into our most recent all-time high, close to 70,000. So definitely lots of price volatility and price appreciation packed into those past 2 years. Now, you can do this on any particular token or coin inside of the crypto market space. We'll stick with Bitcoin for this first video and just cover some additional nuance here for those new to this particular asset. So here I have a cryptocurrency price by market cap. It's showing some of the top 10 holdings along with the remainder of this marketplace, and it's ordering it by market cap. So as we've always seen, Bitcoin is still leading in market cap. We've seen over the past 2 years that this particular asset has actually gone above a $1 trillion market cap. And what's more interesting is during the most recent earnings reactions to stocks like Meta Platforms, previously known as Facebook, along with semiconductor names like Nvidia, Bitcoin actually holds a larger market cap than some of these companies. So this asset is gaining more and more traction, more and more adoption, and just more and more interest as the market cap continues to grow over time. As we move down, things like Ethereum with ETH tokens, we have our quote-unquote stable coin with Tether USDT, different market caps shown here. Binance USD coin, another stable coin, Ripple with XRP, Cardano with ADA, and then Solana with Sol. Newer entry into the top 10, Avalanche with AVAX, and then Terra with Luna, just kind of capping off our top 10. We've also seen a steeper decline in the quote-unquote meme coin top 10 holdings, where certain coins like Doge and Shiba Inu actually held top 10 holdings for a period of time. But during the more steady bearish performance over the past couple months, these have not only continued to lose market cap overall, but have also seen just a general decline in the overall pricing of the relative tokens. So that is an overview of our top 10 market cap. As we shift into a total cryptocurrency market cap, and we just look over the past 7 days, we can see that, yes, the volatility in the equities market and some of the steadier selling we saw over the past couple of sessions has certainly filtered into crypto as well, with our all-time or our past week high market cap close to about 2 trillion, but seeing that being a relative top for the past week and getting as low as about 1.73 trillion for total cryptocurrency market cap. Keep in mind, though, that Bitcoin holding about 700 billion market cap represents a significant portion of this total. And then last but not least, some news that occurred over the past week. We had things like the Super Bowl, which was aptly named the Crypto Bowl, due to some of the advertising that occurred during this game. Different digital currency platforms, exchanges, and even brokers were listed as some of the participants of the advertising that occurred. We had those like eToro, Crypto.com, FTX, and then we even had things like Coinbase, which showcased a QR code in a DVD style format going across the screen. And a lot of people refer to this meme of a callback to The Office, as those watching in a particular meeting saw this QR code or DVD icon come into the corner, change colors, and everybody celebrates, notwithstanding. So lots of new participants seeing crypto being advertised during a sporting event, and also lots of new interests coming into this space, even though the initial usage of, for example, Coinbase's code actually led to the platform being down for a period of time. Last but not least, we have things like the OpenSea NFT marketplace, which is experiencing a quote-unquote hacking event, more recently clarified as a phishing attack where certain individuals were targeted and their wallets have been cleared out of some of their holdings. This is, of course, a common scam that most people would be familiar with, where you'll get a malicious intended email. And in this case, these particular users were targeted with a malicious smart contract that allowed the quote-unquote hackers to gain access to their holdings and remove them from their respective wallets. So in an unfortunate event and a fairly notable marketplace, I think a lot of NFT participants are familiar with OpenSea, and founders, along with people involved, are certainly looking into this to make sure that the platform is not at risk. So with that said, this is the end of the first video for the Weekend Crypto Update. Moving forward, videos will probably be a little bit less lengthy. We'll have less to cover as we start to layer in new information, but we have our foundation already established. I want to thank everybody for joining me this weekend. Hopefully this has been insightful and just a fresh perspective. Additionally, if you have any questions, feel free to reach out or leave comments in the video below. As always, thank you, and see you next week in the marketplace. Trade safe and talk to you then.